Section 1, a short seller's bite. Hindenburg Research takes on Adani. Hindenburg Research, an American investment firm, has gained notoriety for its short-selling reports targeting high-profile companies. These reports often allege corporate malfeasance and fraudulent activities, leading to significant market reactions. In January 2023, Hindenburg set its sights on the Indian conglomerate Adani Group, sending shockwaves through the Indian stock market. Adani Group, a multinational conglomerate with interests in ports, energy and infrastructure, is one of India's largest and most powerful business entities. Led by Gautam Adani, one of the world's richest individuals, the group has experienced rapid growth in recent years, attracting significant investment from both domestic and international investors. Hindenburg's report, however, cast a dark cloud over Adani's success story, alleging a web of stock manipulation, accounting fraud and money laundering. The report sent shockwaves through the Indian business community and beyond, triggering a fierce battle between Hindenburg and Adani Group. Adani vehemently denied the allegations, accusing Hindenburg of a malicious attempt to damage its reputation and profit from a decline in its stock price. The controversy quickly escalated into a high-stakes legal and public relations battle, with both sides trading accusations and counter-accusations. The Hindenburg-Adani saga has captivated the attention of investors, regulators, and the general public, raising important questions about corporate governance, market integrity, and the role of short sellers in holding powerful entities accountable. The controversy has also highlighted the increasing influence of short sellers in global financial markets and the potential impact of their research on corporate valuations and investor sentiment. As the battle between Hindenburg and Adani Group continues to unfold, it is essential to examine the key allegations made by Hindenburg, the response from Adani and Indian regulators, and the broader implications of this high-profile corporate clash.
Section 2. The Hindenburg Report, Allegations of Fraud and Market Manipulation. Hindenburg Research's report on Adani Group made a series of damning allegations, accusing the conglomerate of engaging in a systematic scheme to manipulate its stock price and defraud investors. The report, based on a 2-year investigation, alleged that Adani had used a network of offshore shell companies and related party transactions to inflate its revenue, conceal losses, and artificially boost its market value. One of the central allegations concerned the use of offshore entities in tax havens like Mauritius and Cyprus to obscure the true ownership and control of Adani Group companies. The report alleged that these entities were used to conduct round-tripping, a practice where funds are routed through multiple companies to create the illusion of genuine business transactions and inflate revenue figures. Hindenburg also accused Adani of using these offshore entities to manipulate its stock price by engaging in insider trading and wash trading, practices that artificially inflate trading volume and create a misleading impression of market demand. The report further alleged that Adani Group had engaged in accounting irregularities to mask its true financial performance. Hindenburg accused the conglomerate of overstating its assets, underreporting its liabilities, and using creative accounting techniques to inflate its profits. These allegations, if true, would suggest a deliberate attempt to mislead investors about the financial health of Adani Group companies. Hindenburg's report sent shock waves through the Indian stock market, leading to a precipitous decline in the share price of Adani Group companies. Investors, alarmed by the severity of the allegations, rushed to sell their holdings, fearing that the conglomerate's true value was significantly lower than what its stock price reflected. The report also raised serious questions about the adequacy of regulatory oversight in India and the ability of regulators to detect and prevent corporate fraud.
Section 3. SEBI's Response, Investigating the Claims and Countering Hindenburg. The Securities and Exchange Board of India, or SEBI, faced immediate pressure to respond to the allegations levied by Hindenburg Research against Adani Group. The regulator launched an investigation into the matter, examining the claims of stock manipulation, accounting fraud, and regulatory violations. SEBI's investigation focused on reviewing Adani Group's financial statements, related party transactions, and compliance with securities laws. In addition to its investigation, SEBI took steps to address concerns about market volatility and investor confidence in the wake of the Hindenburg Report. The regulator tightened its grip on offshore investments, increasing scrutiny of foreign portfolio investors and their holdings in Indian companies. SEBI also announced plans to strengthen its surveillance mechanisms to detect and prevent market manipulation and insider trading. However, SEBI's response to the Hindenburg Adani controversy has not been without its critics. Some market observers have accused the regulator of being slow to react to the allegations and of not doing enough to address concerns about corporate governance and market integrity. Others have raised concerns about the independence of SEBI's investigation, pointing to the close ties between the regulator and the government. Despite these criticisms, SEBI has defended its handling of the matter, maintaining that it is committed to conducting a thorough and impartial investigation. The regulator has also emphasized its commitment to protecting the interests of investors and ensuring the integrity of the Indian capital market.
Section 4. Market Mayhem. Adani's valuation takes a hit, then rebounds. The Hindenburg Report had a swift and dramatic impact on Adani Group's market value. The conglomerate's share price plummeted in the days following the report's release, wiping out billions of dollars in investor wealth. Investors, spooked by the allegations of fraud and stock manipulation, dumped their Adani shares, leading to a fire sale that sent shockwaves through the Indian stock market. Adani Group companies, once darlings of the market, saw their valuations plummet as investors fled. The flagship company, Adani Enterprises, lost over half its value at one point, while other group companies experienced similar declines. The sell-off was exacerbated by margin calls, forcing investors who had borrowed money to buy Adani shares to sell their holdings to cover their losses. However, the steep decline in Adani's market value did not last. The conglomerate, backed by its powerful founder and a loyal investor base, mounted a spirited defense against Hindenburg's allegations. Adani Group denied all wrongdoing, accusing Hindenburg of a malicious attempt to profit from its downfall. The group also launched a charm offensive, seeking to reassure investors about its financial health and corporate governance practices. These efforts, combined with a broader market recovery, helped Adani Group regain some of its lost ground. The conglomerate's share price rebounded, albeit not to its pre-Hindenburg levels. The recovery was fueled in part by support from institutional investors who saw an opportunity to buy Adani shares at a discount.
Section 5. Conflict of interest concerns SEBI chief under scrutiny. The Hindenburg Adani saga took a new turn when allegations of conflict of interest were leveled against Madhabi Buch, the chairperson of the Securities and Exchange Board of India, SEBI. Critics raised concerns about Buch's past investments in a fund that had ties to Adani Group, suggesting that her financial interests could potentially influence her judgment in the investigation. The allegations stemmed from Buch's previous role as the managing director and chief executive officer of ICICI Securities, a leading financial services firm in India. During her tenure, ICICI Securities had invested in a fund managed by New Silk Route, a private equity firm that had invested in Adani Group companies. While Buch was not directly involved in the investment decision, her past association with the fund raised questions about her impartiality in the Adani investigation. Adding fuel to the fire, Hindenburg Research itself weighed in on the matter, accusing SEBI of being ineffective in protecting investors and complicit in the alleged wrongdoings of Adani Group. Hindenburg pointed to the regulator's close ties to the government and its history of lenient treatment towards large corporations as evidence of its bias. The allegations against Buch and SEBI further eroded public trust in the regulator and cast a shadow over its investigation into Adani Group. Critics argued that the perceived conflict of interest undermined the credibility of SEBI's investigation and called for an independent probe into the matter.
Section 6. Stakeholders speak out. Congress demands action. Kotak denies involvement. The Hindenburg-Adani controversy drew reactions from a wide range of stakeholders, reflecting the high stakes involved and the broader implications for India's corporate landscape. Political parties, industry groups, and market participants weighed in on the matter, expressing their concerns and demanding action. The Indian National Congress, the country's main opposition party, seized on the controversy, accusing the ruling Bharatiya Janata Party, BJP, of protecting Adani Group and turning a blind eye to its alleged wrongdoings. Congress leaders demanded a thorough investigation into the matter, calling for a joint parliamentary committee, JPC, to be set up to probe the allegations against Adani. Kotak Mahindra Bank, one of India's largest private sector banks, found itself drawn into the controversy when SEBI's investigation revealed that a fund managed by the bank had invested in Adani Group companies. Kotak Mahindra Bank, however, denied any wrongdoing, stating that its investments in Adani Group were made independently and in accordance with all applicable laws and regulations. The controversy also sparked a debate about the role of short sellers in capital markets. While some market participants defended Hindenburg's right to publish its research and hold companies accountable, others criticized the short seller's tactics, accusing it of engaging in market manipulation and profiting from the downfall of Indian companies. The Hindenburg-Adani saga has had a profound impact on investor confidence and regulatory oversight in India. The controversy highlighted the vulnerabilities of India's corporate governance framework and the challenges faced by regulators in detecting and preventing financial malfeasance.